Welcome to Real Estate Exposed, helping people in San Diego buy, sell, and refinance their biggest investment. Delivering you timely truths, exposing important issues, and helping you get into the right home. By the sea. Real Estate Exposed. I'm gonna make this place your home. Here are your hosts, real estate expert Daniel Beer, top-ranked professional by sales volume at one of San Diego's largest brokerages, and his mortgage partner, Todd with over $2 billion in funded loans.
Good morning to you. Back here on Real Estate Exposed, I'm Dan Beer with Todd Pianin, and we have an awesome show set out for you today. We're going to jump into a number of extremely critical topics. Todd, how you doing today?
I'm doing great. How you doing, Dan?
I'm doing great, and I'm glad, and I hope you out there also are. We're going to touch on a number, like I said, of really critical questions. One is that we're being constantly asked by buyers and sellers out there if the market is coming to a peak, what's going to happen, what is it going to look like? And we're going to let you know why this time is different than last time. There's some extremely fundamental, very important differences. We're going to go ahead and explore those.
That's exciting to me, Dan, because I want to know what those differences are.
Well, we're going to also talk about how to save thousands when writing and negotiating your offer as a buyer. There's some very critical things that you can do that will legitimately be guaranteed to save you thousands when writing and negotiating your deal. We're going to go through those. And we're going to talk about the most critical questions you need to know about your seller. Negotiating is an art form of it's, you know, there's spy activity almost that needs to happen. We're going to go into that. What are the most critical questions you need to know about the seller that are going to give you the intel you need to go ahead and make the best offer you can.
Spygate. We're gonna jump right into. We're going to jump right into talking about the seller part later, but let's talk about this Tom Brady situation. You know, Deflategate. I mean, Tom Brady has been one of my heroes for a very, very long time.
Wait a second, I didn't know that about you. Are you serious?
I have a signed Tom Brady football at my house, actually.
Oh gosh, I need a new co-host.
And I'm just really, really, really disappointed in what went down, and I'm really disappointed in what's gone down in the past with the Patriots as well. I mean, this is just getting ridiculous, but I mean, I also don't enjoy the fact that he's going to be out for the next 4 games. I mean, this to me, that bums me out completely.
Well, Todd, beyond the Patriots offense, I see a deeper issue here with this entire Deflategate, problem. And I don't know that, yes, if it wasn't Tom Brady, it would still matter. It would still matter to the integrity of the game and so on. And there are very legitimate issues on why the NFL would have to be concerned.
But you do realize that he's like one of the highest paid pro athletes. He's married to an extremely beautiful woman and has, a nice home.
And exactly it's exactly that's bothering me about Deflategate. It's that the fact that it's Tom Brady. And so you have all of these people that are devastated because their role model's been caught. Then let's say it. He cheated, okay? This is no longer did he not. The guy cheated, and you have all these people that are deflated, not to use that word, but they're deflated over the fact that their role model did this. But the problem I'm seeing is, why is he a role model? I mean, I never understood personally. Because
he's good looking, because he's a professional athlete, because the media has portrayed him that way.
Yeah, but why is he? Why would anybody really? Why do we have this culture of role models of people that can? Like, to me, a football player is someone that threw the ball fast or far and ran fast and can hit hard. What on earth does that have to do with allowing ourselves to get emotionally involved with who this person is? And there's I think at the core of it, I think that the entire, this conversation's been going on forever. I mean, Charles Barkley, famous for telling people he's not a role model.
Michael Jordan with the gambling. Hey, I grew up with Superman as my role model.
Yeah, I mean, I understand the need for role model, but here's my memory of a role model. I remember my parents as my role models. I remember various family members, various teachers. I remember just people who I really knew being my role model. And I think that part of this Deflategate conversation made me just think that there's a deeper issue here in our society where we're relying on these figures, but why?
Well, the whole thought process of role models has changed. I mean, if you think about it, look at like the Kardashian empire, Dan. I mean, these are role models to little girls. I mean, I pray to God that my little girl does not look up to Kim Kardashian.
And she won't, Todd. And she won't, and your kid won't either if they have strong role models at home. So I really think that this discussion comes back to what kind of parenting are we doing? You know, what does the home look like? Are there enough role models at home that they don't have to look for, you know, to look out into society and decide that, you know, these people who we don't truly know are going to be our children's role models? And I just think it's a big issue that goes truly very deep. You know, I just never understood that. It's all about, to me, this is a parenting issue. Okay, and speaking of parenting issues, it's even, you know, it's funny to me because I live in a really nice suburb here in San Diego, and you have all of these, you know, and all these parents, these moms, I'll watch them argue about one school over the other school because one has a 12-to-1 teacher ratio, the other has a 14-to-1 teacher ratio.
Right.
But goodness, I went to school in the South Bay, and I think I had like a 35-to-1 school teacher. Student to teacher ratio.
I went to school in Los Angeles, and I think we had like the similar 35-to-1 if there was a teacher that day.
If there was a teacher that day, exactly. If the substitute didn't show up.
Right.
I went to a high school where not even half of our class went to college.
Wow.
Okay, and a huge percentage of those that did not get through it. But where did I go? I went to Syracuse University. Where did my friends go? They went to Stanford. They went to Cornell. They went to Penn State. They went to UCLA, UCSD. All at the same high school as the rest of these kids that didn't even go to college to begin with.
Right.
Now, it's not a judgment on going to college versus not, because there's actually plenty of argument there on why I think not everybody should or has to. But the point is we got that education, that role model, that came from home. We all had very similar households living in the same neighborhoods as the other kids.
Yep.
That had a very different experience, but they also had different parents.
I get it.
So we're going to be.
that was a fast one right there.
Well, you know, I just think that the parenting issue, if we could improve that in America, I know that the poverty issue, the drug issue, the education issue, so much that our society is facing would be on its way to being greatly and vastly solved if we could just go ahead and focus in on, you know, the attention that we have to give our kids. And by the way, I didn't always live in this suburb. When we moved to America in 1985, I lived in a little tiny apartment across from McDonald's on Bonita Road. And now when I drive by there, I can't believe I lived there. But The truth is when I was growing up, my memory of growing up is that I was in heaven, that I had this amazing place to live. And that's because the amazing place takes place in the relationship between you and your children.
Understood.
So when we're going up next here on Real Estate Exposed, we're going to talk about the market peak, why this time is different than last. You're listening to Real Estate Exposed on News Radio 600 KOGO and iHeartRadio. Welcome back. We're here on Real Estate Exposed. I'm Daniel Beer, your real estate professional, and Todd Pianin, my most trusted mortgage advisor.
Thanks, Dan. Welcome back.
So last week was Mother's Day, and we did something really nice for Mother's Day that was just very, very widely received, and people just reached out to us during the week, told us how great it was. So we're going to offer this again. Last week for Mother's Day, we actually offered a free report that we put together called The 8 Secrets for Saving Thousands When Finding, Buying, and Financing Your Next Home. And this is a free report that all you have to do is text your full name and email address to the following number. We'll go ahead, shoot it right off to you, period. There's no obligation for anything else. It's just a free report that we put together as a Mother's Day gift. And because of how...
it's going to come out to you tomorrow. It'll come out to you tomorrow.
You'll have it in your inbox tomorrow. If you prefer it mailed to you, just go ahead and text your mailing address, and we'll do that as well. And by the way, it does include a free appraisal and a free credit report. So here's the text in phone number. It's 858-432-3868. Again, that's 858-432-3868. And you're going to get the 8 secrets for saving thousands when finding, buying, and financing your next home by texting 858-432-3868. And we'll have an extended Mother's Day celebration here.
Cool. We should make it all month, Dan.
So, you know, One of the biggest questions we're finding out there in the marketplace right now, and Todd, you tell me if you're also getting this from your borrowers, but we're having a lot of people ask us if we're reaching a market peak, or is there going to be some kind of major correction? Are we going? Basically, what they're really asking is, are we going to experience another 2008 or another 2000? Another collapse, another major devastating collapse? And it's a pretty good question. I mean, Who wouldn't want to be armed with that information to make sure to avoid that? I have my thoughts on that. Todd, what's your viewpoint on that question? Do you get that from your borrowers?
We get that all the time, and one of the things that I can tell you is that Fannie Mae just released a report that says we're now in a 10-year cycle. We're now in an upward trending cycle. They've completely changed their tune, meaning that we are going to move into a higher interest rate environment, but we're also moving into an appreciating market. And cycles usually happen in 10 years, and they're calling for a 10-year appreciation cycle. We may not see the crazy appreciation that we've seen in the past, but when I talk to my clients all the time, they ask, am I paying too much?
Is it fair to say that then we're about 2 years into that 10-year cycle, because our appreciation did start kicking in pretty nicely in 2013 and into 2014? Maybe we're in the third year of that cycle. Would that be accurate?
I would say so, yes.
All right. Well, that makes a lot of good sense.
I mean, based on what you told me my house is worth and what I bought 2 years ago, I would say that we're definitely in the beginning of that. We're in round 2 of a 10-year round.
Yeah. Well, and there's just from my point of view, because I don't have necessarily the crystal ball and can't look out completely into the future, though I can rely on what these Case Shiller will put out or Fannie Mae will put out. But what I do know is this, and this is fact. This is not based on opinion one bit. We are in an extremely different environment, just fundamentally, than where we were when we created the disaster of 2008, 2009. But that disaster was created in 2002, 3, 4, and 5.
Correct.
And what it was is that if you could afford a napkin, if you had enough pennies saved up for a napkin and a few extra pennies for a pencil or a pen,
right,
you could then scribble on the napkin, walk into any mortgage lenders, banks, or whoever else's office you wanted. And Todd's giving me a big raised eyebrow right now because he actually did not engage in that at all, and their default rates were unbelievably low because they actually avoided that. So let me rephrase that. But you could call. It would not be very difficult to find a lender who you could then hand that napkin to and get yourself a loan. And let's I
have a funny story about that.
Tell me.
So Planet Money on NPR, it's a daily show, a podcast, and they did something that they talked about the mortgage crisis, and they talked about the mortgage bubble, and they talked about it blowing up. And the best story I can tell you was that this one they interviewed from the borrower all the way to the mortgage-backed security floors. And one of the funniest stories I remember from that period or that episode of that show was they interviewed a guy who basically was a plumber. And the guy made like $17 an hour, and he owned a home. And at the time, he had some equity in his home, and he went to a mortgage lender, and he basically took $300,000 out of his house because those homes appreciated so quickly in such a short period of time. He was able to take cash out of his house. And he defaulted on his...
I could see where we're going now.
Yes, he defaulted on his mortgage. So they asked him a question. They go, would your brother have loaned you money? He said, absolutely not. I wouldn't pay it back. Right. They said, would your parents have loaned you money? He said, absolutely not. So what they said was, you went to this bank and you basically, blew in a mirror and saw yourself, looking back at you because everyone thought the appreciation was just going to keep going. You didn't make enough money to qualify for the mortgage, but somebody actually gave you an additional $300,000 in cash. Mm-hmm. He said yes. And they said, what'd you do with the money? He goes, well, I bought a new car. I took some family vacations. We got some new TVs. We did, And they said to him again, so would your brother or sister or family member have loaned you money? And the answer was no. So I have to tell you that in today's world, in today's mortgage environment, they're not giving out loans like chiclets. So you can't just look in the mirror and blow and see if if you can fog out your picture in the mirror.
Right.
It's a totally different marketplace out there, and we have a total different vintage of consumer or a buyer and standards that we get to, which I know becomes a problem for you, Dan.
Well, let's just talk about the why behind that, because a lot of our listeners out there are in the process of thinking about getting a loan or maybe thinking about getting pre-approved, but there's so many people I just don't want to go through the paperwork aspect of it and the documentation. I'll give you my personal viewpoint, but I definitely want to hear from you, being the mortgage professional. From my viewpoint's very simple. Okay, I have a very simple way of thinking about most things. You want somebody to give you hundreds of thousands of dollars, and you have an issue with filling out some paperwork? I mean, you want a guy to write you a check for $200,000 or $300,000 or $400,000, or some of you out there, you want $1 million,
right?
And it's inconvenient to you that you're going to maybe have to go get your tax return,
right?
So, if you want money at 4%, you might find it worth your while to go get your tax returns, maybe a few pay stubs, fill out a pre-qual form, and hand it to a mortgage professional that you know and trust, or that's referred to you by somebody like through this show, and talk to somebody like Todd Pianin about getting you your hundreds of thousands, if not your $1 million that you're looking to borrow. That just to me seems like basically a win-win. Or here's an alternative plan. Be ready to pay 8 or 9 or 10 or 11 or 12%. And I'm sure there's someone out there that'll be ready to just hand you some money.
There is. I mean, you can. There are hard money lenders. We call them hard money lenders or private money lenders who would love to get a return of 8 or 9 or 10%. But what you probably don't know, Dan, is they're still requiring them to give them the tax returns.
They're still going to require some degree of documentation.
Correct.
They're still going to, more than anything, degree a reasonable down payment that if you were to not pay them,
right,
they're actually perfectly happy with that.
Right.
They made their 8, 9, 10, 11, 12% on their hard money loan.
And they want like 30% down.
And
right?
Then they'll take their house and they'll be perfectly happy.
Right.
Anyway, I digress.
You do.
But to me, it's just like, boy, Phil, it just seems like a fair trade. A little bit of paperwork for a whole lot of money.
Well, it's stabilizing the market. So what we're going to see is that we're not going to have the same kind of mortgage crisis occur, because the quality of the borrower, or we like to call it in the business, we say the vintage of the client right now, is a very, very high vintage. And what I mean by that is, like, you think about like a very good glass of wine, right? What vintage? We drink wine, we always say, what year? What where'd it come from? Well, I can tell you, since the mortgage crisis, the vintage of the borrower has been higher. I can tell you that we have seen we went from one extreme to the pendulum. We're kind of getting closer to the center. We're not asking you for a letter from God anymore. We took that off the table, but we're getting things a little easier. And it's making it a little easier for the clients. But giving someone tax returns, pay stubs, and a few bank statements to prove they have the money to buy the house, I don't really see that as being. It shouldn't be that big of an issue for somebody.
And when bringing that back to the real estate side of the question, it's, at some point, and it could be 5, 6, 7, 8 years from now, like Fannie Mae is predicting. At some point, yes, I concede there will be a correction, but we can't allow what the disaster and the bad memories we have of 2009 and this past cycle ruin that projected future correction and what that picture will look like, because fundamentally we're in an extremely different environment. Every borrower out there in the marketplace, all your neighbors that have recently moved in over the last couple of years, they are overqualified. They are not, for the most part, barring some kind of huge change in their life, a job loss or just something fundamentally just becoming, a disaster in their personal life. Barring that, everybody out there is very, very qualified for the loan that they've had. All your 2010 and 11 and 12 and 13, 14, 15 borrowers are very qualified.
Super qualified.
That's going to protect the market, because even in the case of a correction, it'll just be a correction. And by the way, markets do correct, but they don't always absolutely implode, crash, and fall off a cliff.
Right.
Okay, so it's faulty thinking to think that the next correction will be like the last, because the lending environment is so dramatically different.
Agreed. I say give out the report one more time, Dan. Let's give it to them for free.
That report that we have, it's a free special report. We've put it together for you. It's 19 pages. It's substantial, and it comes with a free appraisal and credit report. Is the 8 secrets for saving thousands when finding, buying, and financing your next home. That text-in phone number is 858-432-3868. One more time, that text-in number is 858-432-3868. And
name and email address.
Name and email address is what we need from you. Name and email address. And coming up next, we're going to be talking about the most critical questions that you have to know about the seller if you're planning on negotiating an offer. What are the most critical things you need to know about that seller to guarantee that you're armed with the best information? This is Real Estate Exposed on News Radio 600 KOGO, iHeartRadio. And we're back here on Real Estate Exposed, News Radio 600 KOGO. I'm Dan Beer, your real estate professional, with my mortgage man, Todd Pianin. And speaking of mortgage, we have Jason in San Diego on the line with the financing question.
Hey, Jason, you have some questions about refinancing?
Yeah, yes, good morning.
Good morning.
We have a family condo that we're living in, and we've maintained all of our mortgage payments, but we got behind on our HOAs.
Right.
And so far we can't find anybody to get us a loan. And someone in the family said, why don't you get a second? And the only thing is that we can't, who do we go to? Different funding companies?
Well, Jason, we've got your information, and what I can do is my partner, Taisha, can call you. You know, we can give you a call tomorrow. You being behind in the HOA should not prevent you from being able to refinance your first. We should be able to include whatever you're behind on the first, if you qualify, into a new mortgage and get you caught up on the get you caught up on the HOA.
Yeah, and now on the qualifications, it's 3 of us in one house.
That's okay. We can handle that. That's not a problem. So you gave our producer your contact information?
Yes, sir.
Okay, perfect. So my partner, Taisha, I will give you a call on Monday, and we'll come up with some solutions for you. I'm sure we can help you out. Okay?
Great. Thank you so much.
Thanks for the call.
Yes. Bye.
Bye.
Great. And so that's a great question somebody called in with. And actually, truth is that when he first asked this question, I actually thought, oh boy, you know, I didn't realize the solution you were going to have for him is what I'm trying to say. You know, that's why you want to not make assumptions on where your situation is. Some of you will assume that you're, you know, really far out from being able to get financing. Some of you just don't take the steps now to plan for that. And you might find that answer is going to be dramatically different than what you think it is. And that's why, you know, as nice as it is that a lot of the, you know, buyers out there in the marketplace will first come to us as real estate agents and start talking to us about what they want in a home. I have to say that first step is always stopping off at somewhere like Samuel Scott or, you know, a lender that you really trust, because the first conversation has to be with the lender to get that plan together, and then that's where somebody like myself would step in and put the blueprint together on, you know, being able to find exactly what you're looking for. So that's a great call.
It was a great question. And we can definitely help you, Jason. I look forward to talking to you tomorrow.
So the most critical question that you need to ask a seller, okay, you're buying a home. Just to paint the picture here, you're buying a home. There's some really critical questions that you need to know about the seller, some intel, so to speak, that we want to get on the seller. And then very few agents out there, I'm surprised always, you know, because when I'm representing a seller, I'm always very surprised how seldomly I'm asked very much about the seller's situation by the buyer specialist, by the buyer's agent.
You always refer to them like buyer specialist, Dan. You got to realize that the Dan Beer Group only has buyer specialists.
That's why I just corrected myself, because typically somebody that's not asking the right questions is not a buyer specialist, and that's just what I'm used to, because that's what we do on our side, on our team. But so here's something you're going to want to know. You know, if you're making an offer, you want to know simply, why is the seller putting the house on the market? What are their motivations? Are they in some kind of trouble? Are they making a life change? Are they downsizing? Do they have creaky knees? And this is a 3-story property that you're making an offer on, and the bedroom's on the 3rd floor, and, you know, they just had knee surgery and they just can't even get up and down.
Well, I play a lot of Texas Hold'em with my boys, and I also play locally here in town. Okay. And we call that like we like a feeler bet, like a lead-in bet. I mean, so you want to find out what's going on. So you would think that the buyer's agent would ask those questions so they kind of have a feel for what's happening before they go.
That's right. You have to have a feel for what that seller is looking to do, right? When you can't just go in blind. It's actually amazing how I'll suddenly get an offer just hit my inbox. I'll have an offer just hit my inbox for one of my listings.
That you've never talked to the buyer's agent?
And I've never spoken a word to the buyer's agent. The buyer's agent's never reached out and asked me a single question, not let me know that the offer was coming, didn't build an ounce of rapport. And it's just honestly really, really poor salesmanship and really poor business.
Do your buyer specialists operate in that same world?
No, when you're... Not at all. Not at all. And you are listening to Real Estate Exposed on News Radio 600 KOGO. I'm Dan Beer, your real estate professional, with Todd Pianin, the president of Samuel Scott Financial, one of the best lending... just one of the best lenders you're going to be able to run to anywhere here in Southern California. And so, no, our buyer specialists they're taught to pry into as much information as they can get on that seller. Where are they going? Why are they going? What do they do for a living? Are they an engineer type, or are they a creative type? Well, that might make a difference on how we present the offer, right?
Really?
Well, absolutely, because some buyer specialists, some people, some agents representing buyers, because God knows they're not all buyer specialists, will present their offer the same way every time. They'll write, for example, they might write the same fluffy story about their family and how they just love it, and little Timmy really wants to live in the neighborhood, and it's just so touchy-feely. But if you're working with a certain kind of personality on the other end of it, if this is a real director-type seller, an aggressive personality, he's not going to care. He's not going to care.
Right.
What he is going to care about is how it affects him, how it affects his finances, what's the bottom line, how fast are you going to close, and how little of a pain in the butt are you going to be as a buyer. When's that deal going to be done?
Right.
Okay. There's countless other examples, but that is the kind of information you need to know if you are going to negotiate an offer properly. And that is part of what, that's one of the reasons why you really want to reach out. We have this free special report for you, the 8 secrets for saving thousands when finding, buying, and financing your next home. The text-in phone number, all you have to do is send your name and email address. We'll get it right off to you. And that text number is 858-432-3868. Again, that's 858-432-3868. Name and email, and we'll shoot it right off to you tomorrow. It's the 8 secrets for saving thousands when finding, buying, and financing your next home. And it does actually include some coupons for a free appraisal and a credit report. So coming up next, we're going to go deeper into how you want to get your offer structured, presented, and the intel you want to know in order to do the best you can for yourself financially. This is Real Estate Exposed on News Radio 600 KOGO, iHeartRadio. Welcome back to you. We're on Real Estate Exposed with Dan Beer and Todd Pianin. And last segment we talked about, what a buyer should not be doing when or what an improperly presented offer looks like. That's not going to give you the best chance. Why don't we actually paint the picture here of what the perfect offer process would look like?
That would be great. If
you're working with a true buyer specialist like what's provided at the Daniel Beer Group. Let's go through what that difference looks like, and how that really will lead you to a predictably different result, and that result being the greatest opportunity for success. So, the offer. First off, we just talked about who's the seller.
Right.
Who's the seller, right? So if you're working with somebody like Brian Danny or like Bree Castro at the Daniel Beer Group, you're going to have an agent that's going to actually go and do that research. They're going to ask probing questions to the seller, to the seller's agent. They're going to Google them. They're going to look up how many other properties they own. They're going to look at the financing that's been taken out on the property. And they're going to look for any kind of intel or data that can be given to you, because information is power.
Right.
I mean, it's critical that you know as much about the person you're negotiating with in order to be able to find their hot buttons. Okay? Speaking of hot buttons, everybody out there assumes Most buyers will assume that the seller's simply looking for the highest price. But without asking those probing questions, you might not find out that they actually have to be in Phoenix by the end of next month, and that the most important thing to them is actually timing, and that they would value timing over the final extra few $1,000s.
Right.
Or that they actually just bought new construction and their home's on the market now, and they have this long bridge of time gap of time that they have to bridge, and that really would be a hot button for them would be a buyer that would be willing to give them a lease back.
To let them stay in the house for some time.
Yeah. These are just random examples here, but the point is you're not going to ever know that if you're not asking probing questions and gaining as much information about the seller as possible, right?
I agreed. I mean, to me, if I were to use Brian or Bree to buy a house, I mean, it sounds really exciting to me that they're asking all these questions or finding out what the motivation is. I mean, I would have no problem doing a shorter escrow period if possible. If that's going to get me a better deal on the house as a buyer, I mean that would be huge.
So let's talk about a better deal, because a lot of times, we're in a pretty fast moving market right now. Supply's low, demand's high, and a lot of properties have multiple offers on them.
You're selling homes in like 4 days, Dan. I mean,
homes are going quickly, and so one of the things we'll do on our team when representing our buyers,
right, is
we'll look for ways to enhance the value of your offer without it costing you any money. Let me explain that.
Yeah, could you? What does that mean?
So the offer, without getting too technical, the offer, the California purchase agreement is pre-written, for example, to provide for 17 days for your investigation period. Okay, this is the time in which you can do inspections and termite and just go and look at it, make sure you like the sunset, make sure you like the colors, and it's your time. It's a very important time, so it shouldn't be taken lightly. But that's your time to understand and make sure that you're comfortable with the condition of the home. So the purchase agreement is pre-written at 17 days.
Right.
But the reality is this: if we get you under contract today, I mean, within 48 hours, our inspector's going to be at the home. Within another 24 hours, we're going to have the report. And we're going to have plenty of time to negotiate any necessary repairs. Okay? If we understand, and so that's just one that's one example. And where I'm going is that if we understand how fast we can do that, and that we really truly don't need 17 days, well, we can reduce the investigation contingency, as an example, to 12 days.
Well, as a seller, I'd be 17 days of my house off the market. I mean, that's half a month. I mean, I could be missing a huge window there.
Exactly. So now you might be more inclined to go with my buyer, who is giving you a 12-day rather than the traditional 17 to remove that inspection contingency. Now, why would we do that? Why would we put our buyer there? Well, because we understand how this contract works. Until we're absolutely comfortable with the fact that we are ready to go, that we have all the information we need, we got our inspection done, termite came in, all our ducks are in a row, well, we're not going to remove the contingency. And we understand that in California, that contingency is actively removed by signature only. It doesn't just disappear.
Explain that.
So there's active removal or passive removal. And in some states, I believe Arizona is one of them, but don't quote me on it. When that time frame comes, poof, your protection is gone. Your contingency disappears. In California, you actually have to sign it away in writing.
You have to sign something that says, I release my contingencies.
You have to literally sign it. So that can't happen by accident. So the point I'm making is, let's enhance the value or the perceived value of your offer by reducing the time frame to something we know is comfortable anyway. And I'm not talking about loan. You'll notice I'm not talking about loan because we typically need all our time on loan. But for investigations, that's one way where we can improve the perceived value of your offer.
Makes it look good.
Okay. Another thing that we can do is, what will that opening offer be? How much will you offer for the home to begin the negotiation? And here's my personal philosophy.
We are buyer specialists, what they call lowball a deal.
Right. That's one of my favorite terms, the lowball. So no. The philosophy that we operate with, and of course it's always going to be your decision as our client, as the buyer, and as it should be no matter what agent out there you're working with. It's your decision at the end. But the way we'll advise our clients is, let's make the lowest possible offer that still stands a reasonably high chance of producing a positive response. Let me repeat that. Let's make the lowest possible offer that stands a good chance at producing a positive response out of the seller.
So not pissing the seller off, basically, by giving them a low ball offer.
Yeah, that's exactly right. Right. So if the home's priced at $500,000 and your offer's $400,000,
right,
you're going to get nowhere. Best case scenario, the seller simply counters you back at full price because you've left the seller no opportunity to make any kind of move. You've really not allowed them to negotiate at all.
So you guys are basically playing chess the whole time with these sellers.
Well, it's just going back to your poker analogy. When you make a bet in poker, it's worth making a bet if it's going to get you information back.
Value bet. Exactly.
Now there's no exact line as far as what is that lowest offer. It's a gut feel, and it's a gut feel based on all of our experience.
What's all the research you guys have done on the seller before you're even writing that offer?
And on the market and the condition of the market, exactly. But you want to make the lowest possible offer that'll get a positive response. A positive response being defined by that seller actually moving off their price and giving you information back. You want to get them to engage with you. Okay, just simply throwing out some kooky low number that gets you no information back, you're still at square one. Or you're out of the deal completely because they just don't want to deal with you. And so that other thing you really want is you want to understand the local data for where, how is the market behaving where you're making this offer? What is the list to sales price ratio in that neighborhood? Are most of the homes in that neighborhood going at 99 or 100% of the asking price? Well, you better make a pretty darn good offer. Or are you making an offer in a neighborhood where maybe there's a 96 or 95% list to sales price ratio? Now that tells you that, in that particular neighborhood,
you have a little more wiggle. You have more wiggle room.
The sellers, for whatever reason, are pricing with more wiggle room, so you can also be aware of that. And then, of course, how does that play in with the current supply and demand picture? So there's a lot of moving parts to it, but these are the things that your buyer specialist has to have access to, and it goes way beyond the comps. I love saying the comps because that's what you hear out of everybody. What are the comps?
Yeah, it goes back to almost your list and pray comment last week, right? I love you have the comps, low ball. We're in a totally different market today than we were in a year ago. Wouldn't you agree? When you do an offer, one of the things that we do for your team, Dan, is we offer a full real pre-approval on your clients before they write offers for your buyer specialist for Brian and Bree. What that means is that we actually have an underwriter underwrite the file. We pull credit, we look at tax returns, we look at bank statements. We have a completed file. So a lot of times Brian or Bree may write a shorter loan contingency as well because they know we already have gotten the loan pre-approved, which helps them.
And our producer's letting us know that somebody's actually reaching out right now to the studio asking for that number for the free special report we've put together for you. So that's actually the 8 secrets for saving thousands when finding, buying, and financing your next home. We'll go through all of this in great detail. And that's 858-432-3868. 858-432-3868. You're going to want to just go ahead and text us your name and email address. We'll shoot it off to you first thing tomorrow morning. And Todd, we ran out of time. We've been having too much fun.
Today was a great day.
Today flew by, and we're going to look forward to seeing you again next week.
Talking to you next week.
This is Real Estate Exposed with Daniel Beer at Windermere Homes and Estates, Todd Pianin at Samuel Scott Financial, my mortgage guru, and we're going to be seeing you next week. Have a great Sunday.